how do you get the best price on car insurance? We're gonna go over the 10 best ways to get the best price, some strategies that will help you understand that. The first one might sound like an advertisement, and it's not. It just happens to be that this channel is a fit for most of the scenarios that people are looking for. First one is to shop around. If you don't fully trust your agent or you're looking for someone new, find an independent agent that you can trust. There's a link in the description below if you don't have one. If you have one, go to them. It's not the point of the video, it's here to help you, but that's the case of I've connected with some agents in states that we're not in. You connect to our company if they're in states we're in, and it gives you that ability to shop multiple companies without having to make 100 phone calls. So an independent agent can shop State Farm, Nationwide, Allstate, Progressive, Safeco, Geico sometimes. We're in a few states with Geico now. That's a new thing. Curado if you're in Michigan. There's all of these different companies that work independently with independent agents, and they just plug your data in once. It gives you some numbers. You're gonna find that every article you read online is gonna say, shop around. Now here's the trick. If you are new to insurance or you've had insurance for only about a year or so, if it's not a huge price point, try to stay with the company you're with, because having 3 years to 5 years makes a difference. When you've had 3 years with one company, they're giving you what's called a loyalty discount when you're shopping with other companies. If you've had 5 years with one company, that's even better, because as an insurance company, I'm looking at you as a customer, and if you've been with a company for 5 years, that tells me, A, you're not one to shop around. So that means you're likely gonna stay with us for 5 years if we can treat you well, maybe 10 years. That means I'll give you a deal as an insurance company or a discount. It might be temporary, it might be long-term, it just depends on the situation. We'll give you that extra discount that helps you with us because we know that we're going to recoup that in the long term. The second piece is to bundle your home and auto, your renters and auto. A lot of people don't realize that when you bundle things, it makes everything way cheaper. And I'm talking 30 to 40%, sometimes more. And that means if you pay $20 a month for renter's insurance, it might save you $40 a month on your car insurance. That nets you a $20 profit or $20 savings on top of what you would normally do. Because if you just bought auto insurance, you're paying $20 more by not having the renters or the home insurance included. We're seeing some states skyrocket 20+%. Some companies are getting denied for renewal increases. So it just depends on the state that you live in. But when you separate those, you may not be getting the best deal. Talk to your independent agent because they can break them apart if it is a better deal, or they can keep them together if it's going to save you the most money. Number 3 is ask about some major discounts. So multi-car discount, you don't have to ask anymore. If you add a second car on, I don't know any company that won't automatically trigger a multi-car discount. That will save you 20 to 30% just for having a second car. Now don't get me wrong, it's still more expensive because you added a second car, and actually sometimes it's less depending on the coverages that you need. In general, if you live with someone and you can be on the same policy, there are some rules. Talk to the agent and find that out. But if that does work and you can combine them and you are okay with combining them, that's a whole nother video, you will get a better deal than if you just have one car and one car. If you're a good driver, there are telematics programs. You can download an app, you can plug in a device in your car, go 90 days and let them test drive you and see how well you do drive. How hard do you brake? How late at night do you drive? How many miles are you? All of those pieces, there are little tracking devices that you can opt into, give you 10% off, usually right off the bat. If you do well, you can get up to 30% off. Some of them, be careful, talk to the agent, don't necessarily allow the best deal because if you drive worse, some of them will go backwards. So now you lose the 10% and you owe another 5%. I've got several videos on this channel that go over the different versions with each company, but make sure if they do it for only a 90-day period, you can shut it off. That's really ideal, where you don't have to constantly have it on, where they're always watching you drive, because now you're worried, if I make one mistake, am I paying a ton more for my insurance? Not worth it. Mileage plays a factor with probably half of the companies. If you drive low miles, let your insurance agent know. If you drive really low miles, let's say you're retired and you're driving less than 3,000 miles a year, you need to talk to agents that work with Nationwide. You need to talk with agents that do the pay per mile programs so you don't have to pay the higher cost. Now there is a negative to that, because if you do go that route, your rate will fluctuate based on the miles you drive. Where you normally would pay a higher amount, you're going to pay a lower base, and then you're going to pay per mile. So you're going to pay less overall if you drive really low miles. That also includes paid in full. So if you pay the policy for 6 months or 12 months, if you pay the whole thing off, if it's in full, Companies like Progressive usually give you $100, $200. I've seen $500 off a 6-month premium. And I've seen other companies give $100 or more off for 12-month premium. Just depends on the cost of the actual coverage, but you're gonna get a pretty good discount if you can combine your home or renters, if you do the pay per mile thing, or if you're doing the telematics and then you pay in full. Like, all of these things can add up and you can save hundreds, if not sometimes even thousands on your insurance. Number 4 is obvious. You can increase your deductible. If you are paying a lot for insurance, that means that there's risks. If you look at your policy, it's called a declarations page. If you find that declarations page in your email or in your paperwork, you're going to look at your vehicles. You can see every line item has a dollar amount. Look at the line items that say comprehensive and collision. Now, I'm not going to go too in depth on what those are. I've got a video on this channel that'll go over that. But if you look at the amount that you're paying, if those are high, that means you can raise your deductible. If you raise it from $250 to $500 or $500 to $1,000, that's going to make it less expensive. And if it's in a risk where that matters, it can drastically change the price. Now, I get it. If you're doing that, you should know that you're raising the amount that you're going to pay during a claim. So if you have a claim and you have a $1,000 deductible, that means you out pocket $1,000 first before the insurance kicks in and pays the difference. Number 5 is to improve your insurance score, or your credit score, as some people say. It's a combination. If you drive good, you don't have claims, you don't have tickets, and you've done well. If that's the case, some states and companies are 3 years, but most of them are 5. If that's the case, now we just know that credit's the only thing playing the factor. Because we're doing good over here, all of these things, or these pieces of your insurance score, are good. That means the last piece is credit. So improve your credit, that will also improve your insurance score, which will improve what you pay. It does make a big difference. If you have all of these pieces put together, that will lower the cost, again, of what you're paying for your car insurance. Number 6 is one of the biggest ones, which is to understand the coverages that you need to carry. Some people carry too much. A lot of people carry not enough. I have some friends that have carried $20,000 for property damage when they're driving a really nice car that's worth $50,000. Now, we're not talking about covering your car, but if they do damage to someone else's car and it's more than $20,000, which is common, then that means you have to pay the rest. And nobody wants to come up with $10,000, $20,000, $30,000 to pay for a claim. In these cases, there's coverages that need to be put in place. Liability, bodily injury, uninsured, underinsured motorist, comprehensive collision for your vehicle. So it's really the main coverage. I'll link a video at the end that goes over all of the coverages you should carry. That'll go a little bit more in depth. But understand what you carry, because insurance companies look at the limits that you have. If you're really low limits and you're looking to buy low limits, that's fine. They're going to give you the deal based on that. If you're really high limits and you're looking to downgrade, you're temporarily for the next term going to get a better deal, because that's lowering the coverages at a lower risk. But when it renews, you're going to be at the same risk again. So it's going to go back to not as much as you were paying because you're carrying lower coverage, but it's not going to give you that extra deal that you got the year before. Those are some of the little tricks that insurances do. I'll also link a trick video here at the end that'll go a little bit over how to understand the things that insurance doesn't want you to know, and that gives you a better idea. The best way to do it is talk to the agent and find out what your options are and make sure you have the right coverages. If you don't, then you don't want to be liable for things that you thought you had coverage for. Number 7 and number 8 are combined. I've already talked about it. Number 7 is drive safely. If you drive safe, you're going to have a good insurance score, because that includes accidents and tickets and things like that. But also, you're going to show that you're a good driver. If you do the telematics, which is number 9, then that's what we similarly talked about, where they're going to watch your driving. You can prove that you're a good driver, and then you're going to get those deals depending on how good of a driver you actually are. Number 10, actually, we're on 10, 10 or whatever. We're on number 10, I think. And that's a financial decision, a two-piece. Choosing the car correctly, because a lot of people don't understand that choosing the right car makes a big difference. We'll talk about it here in just a second, but reducing the coverages as well. One of the things that I find that a lot of people make a mistake on is they just go buy a car. They like the new Ford Mustang, or they like the new whatever. I had a nephew that recently was looking at an Audi, and I told my sister, don't even ask. Like, I'm not even going to tell you what the price is. Naturally, I checked it, and $700 a month is a lot for car insurance. It's because we all know the Audis are one of the higher costs for insurance. Tesla. We just did a video here recently on how much a Tesla would cost for insurance. Different models of vehicles change over time. An Equinox is a common vehicle that was fairly safe. It actually got downgraded in ratings as far as what we call a symbol, and the car symbol changed. So for those that had the Chevy Equinox in certain years, those got downgraded, which means the risk was higher and the insurance cost went up, which didn't benefit anybody. But knowing that, making sure that you have the right coverage on the vehicle is also, like we talked about, good. But we also want to reduce some of those coverages if we're over-insuring ourselves. If we're carrying the $1 million policy, don't get me wrong, those are always good to have no matter who you are, but sometimes it's way above what you're financially responsible for, and that can play a factor, especially with the age. The younger drivers have higher risk. If you're carrying high coverage with a young driver, you're adding high risks to high odds of paying out a lot. So those things are going to add up together. Typically, the insurance score is not good because they're young and they haven't built it. So there's all these pieces or these profiles as we talk about when you're shopping with your agent. It's just automatically going to happen. You don't have to explain it. It's just going to pull up with the age of the drivers. All of those pieces play a factor. So knowing that you get the right coverages, not too many, without going overboard on those is going to make that big difference. Like we mentioned before, the next step is to check out what coverages you should carry. The Car Insurance 101 is going to go a lot more in depth on what coverages you typically would see. And then the other video that we mentioned is going to be here. I'm Mark with Think Insurance. I'll see you in the next one.